Welcome to Epic Financial Solutions. Once again, we bring you another content on how to save and how to invest wisely. Today, we're going to talk about two important things in the world of investment. We're going to talk about unit trusts and we're going to talk about BEE shares. Let's get on started with the unit trust. What is a unit trust? In a simplified language, a unit trust is simply a portfolio of shares or instruments. Instruments, in simple terms, it's just a packaged financial deal which can either be interest, shares, or it could be a call account or any other thing. That is packaged, and those instruments are then put into a legal entity called a unit trust. A unit trust it mirrors a simple trust. But what happens is that investors put money in, and that money is then pulled together, and then it's invested in different instruments. As we already said, it could be equity or otherwise. And then this block of shares or instruments are then priced together to give an investor one price for that collective. And why should you invest in a unit trust? A unit trust is a good investment if you want to put money away for a period longer than a year. And there are unit trusts like a money market account which can put money for shorter period. But traditionally, from a year onwards, up until I would say about 10 years, you are in a good place for a unit trust there. And now a unit trust is available to anyone in South Africa. Different investment managers charge different amounts to administer, and also they have different minimum amounts to open accounts. Now your unit trust will have your money market, it will have your equities, it will have your balance funds, and it will have either a hybrid of funds that behave like hedge funds or any other private equity fund. Now, to access those, simply call any of the asset managers, including banks. They would offer it. Why would I recommend an asset manager other than banks or some of the banks? Is that asset managers specializes, and their sole focus of running a successful business is based on them running successful and profitable unit trusts with good returns. Whereas banks, they are focusing on many other things. Although that being said, there are banks that have very good unit trusts that are managed very well by people who are qualified. So if you have money that you want to put aside for about a year up until 10 years, please have a look at unit trusts. Our second topic is BEE shares. Now, BEE shares has been a market for black empowered individuals to be able to access shares in big and listed companies. Now, BEE shares are like normal shares, just with special rules. If you are looking to put money away for 10 to 20, 30 years, this is a space that I would like to invite you to explore. The most important thing about BEE shares is research. You can obtain advice and you can do it yourself, but most of the time the money involved only requires you to just do the work yourself. The biggest thing you need to do when you buy a BEE shares is research on the company. Know what the company does, know how long the company has been doing that, and have an idea of the future plans of this company. Are they planning to restructure? Are they planning to break apart a company or merge with another company? Is this company looking to move operations abroad, or they are looking to even move more business in South Africa? Those are just a few of many factors that you need to look at. And again, look at the management. Look at who sits on the board, the chairman and the people who are independent non-executive directors tell you a story about the confidence of executive management within the company. And when you buy BEE shares, the good thing about it is that you'll be locked in for a period, either 5, 10, or 15 years. And for that 5 or 10 or 15 years, you are going to forget about that 20, 40, 60 or 100,000 that you've put aside. And the good thing about equity is that on average, in the last 10 years, they doubled every 6 to 8 years. So when that money is logged in there, it's growing and it's going to give you dividends. This is the most disciplined way of putting aside money, either for your kids' university fees, or if you want to start a business or buy a holiday home 10 years from now. That's a place where you can put it and you will not be able to move out of it. The last thing is what happens after the BEE deal reaches the end of its closing period or lock-in period. You have an option of either selling your shares or continue to hold them, and other companies will list them in the stock exchange. Some will get intermediaries who will still manage the shares and just making sure that you're able to trade those shares whenever you would want to. So I would say in South Africa, when you get a BEE call, put money into it, but do the research and make sure that you know what you're getting into, because for money to be made, there must be a risk. And where that risk is just enough for you to sustain over a long period of time, then there comes the returns that are promised as part of long-term investments. This is Surisani Matodzi, bringing you live Epic Financial Solutions, tips and knowledge on how to manage your money better, and especially designed for those who are not finance professional. And if you are a finance professional and I share something and you think this needs to be expanded more or corrected, please feel free to go onto the chat and go and add your thoughts on there. Thank you very much. We'll meet again when we finish this series of investing wisely. Thank you.